Hello and welcome to Dialogue. The annual Central Economic Work Conference has just concluded in Beijing, with Chinese leaders deciding priorities for the economic work in 2026, the beginning of China's 15th five-year plan. The message is clear. China is to boost consumption and build a robust domestic market to deal with external challenges. Meanwhile, institutions such as the IMF and the World Bank have raised their growth forecast for China, underscoring the country's expanding global footprint. What more can we learn from the key economic meeting? What do these signals reveal about China's next stage of development? And how will local reforms, consumer spending, innovation, and continued opening up shape the economic landscape at home and abroad? Join us for discussion today, live from Beijing. I'm Xu Qinduo. Joining me today are Anthony Chan, former JP Morgan Chase chief economist, Dr. Warwick Powell, adjunct professor at Queensland University of Technology, and Professor Jun Qian, executive dean of International School of Finance at Fudan University. Welcome to the show. Professor Qian, I will start with you. So this is the annual Central Economic Work Conference. It usually map out the economic agenda for next year, meaning 2026 here. So what stands out to you from the meeting? What are the priorities, let's say, for the next year?
So I think the most important, as they lay out the goals for next year and the tasks, as you can see, the number one task, as it's been emphasized throughout the document, is to boost domestic demand and to rely more. So basically, high quality growth relies more on domestic demand. And then the second part of this first top priority task is to further build the unified national market, which means clearly the central government realizes that it's kind of challenging going forward that China will continue to have something like a $1 trillion trade surplus. And also there's a lot of uncertainties around the globe. So putting the top priority on relying on domestic demand, building the national market, continue boost consumption, that's something that the Chinese government feel that's in their hands. So that's my the most important read of this meeting. And the second thing is they emphasize innovation again. In the innovation, which is consistent with the 15th five-year plan, they also emphasize that there needs to be, the education system needs to produce more talent in terms of original research, but also transformation of these research output into value creation by firms.
Warwick, let's go back a little bit, to look at the 2025 economy. I mean, of course, next year's growth will be based on 2025. So far, so good, let's say. The IMF and World Bank both upgraded their China growth forecast for 2025. Basically, IMF, the number from them is from 4.8% to 5%. What do you make of that? So 2025, solid growth in general?
Look, 2025 has been a challenging year all around, particularly as a result of external disturbances. The assumption of the Trump administration version 2.0 saw a full frontal attack on global trade on the 2nd of April launched, which ultimately saw, I think, an incredible amount of uncertainty and disruption caused globally, and particularly to trading nations, including China. So China has had to weather these external shocks and at the same time continue its ongoing processes of structural transformations to raise the productive quality of the economy at large, whilst at the same time boosting household incomes, maintaining stable employment or unemployment as the case may be, as well as discharge its obligations and historic responsibilities in terms of the processes of greening the economic development pathway. Taking all of that into account, I think China has accomplished a remarkable outcome to achieve the target of around 5% that it set itself at the beginning of 2025. That's been through a lot of hard work. It's been through investments from government, through active fiscal policy, some loosening of monetary policy. But of course, there is no doubt that Chinese enterprises, particularly in many of the science and technology-led areas, have really shown the way and demonstrated the capacity of Chinese enterprises and industry to drive productivity growth and deliver rising wages across the board.
Well, Warwick, stick with the IMF forecast and also, I would say, some remarks from the director, Georgieva. Of course, this is against the background that China has just posted a record high $1 trillion trade surplus for the first time. So what do you think are the major factors leading to the increase of exports at the time of global tariffs? I would say the rise of protectionism.
Look, the big driver is actually growth in demand from the global south. Whilst the Trump tariffs ultimately led to a significant drop-off in Chinese exports to the United States and vice versa, the trading relationships across much of the rest of the world continue to grow. And China's trading relationships across the Belt and Road Initiative countries, as well as with the global south more broadly speaking, has grown at rates far greater than global trade growth as a whole. And we see that evidenced by the latest data, which is the $1 trillion figure that many people talk about. But when we break that down, we see that that has been underpinned by the developments in high technology products in particular, whether it's EVs, whether it's even in semiconductors, as well as photovoltaic panels, etc. And you've got to look at the places where the growth is taking place. Africa, I think, is a very interesting case in point because the kinds of things that China has been exporting and expanding in terms of its exports are all about African economic development. It's machinery, it's energy systems, it's technology. And this really goes to delivering on China's broader strategic ambition as an emerging great power to be an enabling great power, supporting the development of its partners around the world.
Well, Chen Juan, the Georgieva basically said that she pointed at a depreciation of RMB as a major driver behind China's rise of exports. Personally, I found out that Chinese RMB actually appreciated, versus dollar, for example. They used to be like 7.2 yuan to $1, but now it's 7.0. But anyway, do you see there's a role for the depreciation of RMB since she's calling for the appreciation of this currency, and also, as we understand, there's a rather strong response to this $1 trillion surplus here?
So again, this is obviously an interesting issue. Let me first add that what's the reason sort of behind this record high surplus, especially in a year where uncertainty about tariffs and policies is a very important factor. So I agree with everything that Anthony has just said. I would add a very important factor, and that is the Chinese companies. They're very good at two things. One is, in terms of the product, they are very good at mass production at low cost, right? And because of fierce competition abroad and within the country, they were able to keep the price, not because of the currency. They are able to keep the price low to be very competitive. That's one. And two, if you look at the surplus, in fact, not surprisingly, the export to US actually dropped. Actually, there's a notable drop. So the main increase of export comes from as we have discussed, these new areas, ASEAN economy, Southeast Asia remains the most important trading partner, and also Latin America, Middle East, and these new regions. So the exporters of the Chinese companies are also very good at adjusting their destinies, their strategies, how to market their goods and services, so that the reliance on the US, for example, has gone down a lot. And those two are very important factors, I believe. Now, regarding the depreciation of RMB, as our host has mentioned, in fact, over the last year and a half, RMB actually appreciated a little bit against, quite a bit against the dollar. And going forward, we know that the US, the Fed, has just cut interest rate. And in all likelihood, when there's a new Fed chairman in place next year, we expect that the US will cut interest rate more. When the US cut interest, that tends to lower the valuation of the dollar. All right. So that's fact number one. Number two, it's actually not in the interest of the Chinese government to depreciate the RMB. One, we're now in 2025. If you look at the products, the export products, an increasing amount has been high-end products. So we're not talking about like 10 years ago that the majority of the exporting goods is like toys or low-quality clothing. If that's the majority of the goods, then depreciation of the currency helps on the price margin. But if you're talking about exporting EV, you know, a 3% depreciation of RMB, that's not going to do much because you're competing at a very high-end product. So that's and it's increasingly that trend. Two, as I just said, if you look at the number one priority of next year's economic work, the central government keeps saying they're going to boost domestic consumption. They're gonna build up the domestic demand. So if anything, they should appreciate the RMB, because the flip side of depreciating RMB is that when you import stuff, and China actually import a lot of food items, the imports will actually become more expensive. If you want to boost domestic consumption, you actually want to appreciate the RMB so that the imported goods will become cheaper. So to sum it up, I think China has passed the stage of using a cheaper currency to boost export. Mm-hmm. Two, it's not in the interest of China, with their top goal of boosting consumption and domestic demand, to depreciate the currency.
Solid point there. Anthony, welcome to the show. Any thoughts on the like $1 trillion export surplus here?
Oh, absolutely. I agree with Professor June. What we're seeing here is a situation where China has pivoted towards other markets. And there's another aspect that hasn't been mentioned yet, and that is that because of the weak consumption demand right now, imports were weaker. So obviously you're going to have a higher trade surplus if imports are weaker, but exports were redirected to other countries. That is what China is doing, and basically showing the rest of the world that if they don't have the US market, they have other options, that is to go to other markets. Great to have the US market, it's a large market, but if you lose some of the US market and you gain a bigger share of the rest of the world, you're still able to get a much higher trade surplus. With respect to the RMB, the reason why the United States is saying that China has strengthened the RMB relative to the dollar is because the dollar has been getting weaker. I mean, there's no secret that this president in the United States has said that things would be a lot better if the US dollar was weaker because we could sell more products. So when they see that the Chinese renminbi has appreciated, but not appreciated as much as other currencies, then they're going to argue that somehow the currency is being depreciated. I agree with Professor June. It's not in the interest of China to do that, but that is the rationale behind the argument out there. And maybe a disappointment that somehow China has been able to go ahead and still maintain its trade surplus despite the fact that it's not exporting as much to the United States. That has to be a big disappointment for the United States.
Well, Anthony, the conference said that we must adhere to the domestic demand as the main driver and build a strong domestic market, as we mentioned earlier. It also says the country is to carry out special initiatives to boost consumption and formulate and implement plans to raise incomes for both urban and rural residents. So we are expecting more initiatives to stimulate, domestic consumption and also plans to raise incomes.
Oh, absolutely. I think that right now, when you look at the share of consumer spending in China versus the share of consumer spending in the United States, it's much lower in China. And then if you also look in China, the share of income that is spent on consumer spending is much higher in the urban areas than in the rural areas. So there's opportunity for growth there. So it's in the best interest of China to stimulate consumer spending, and they're going to do that. They're actually going to do that with some of the policies. The policies are like interest subsidies for consumption. That's going to stimulate purchases of electronics, purchases of services, whatever is needed to be borrowed, like a phone or a computer or even automobiles. All that is part of consumption spending that China is going to stimulate by allowing some subsidies with regard to the borrowing. These are all good things that China is doing, and it must be working, because in the first half of the year, economic growth in China was 5.3% in the first half, much greater than the 5% growth target. So whatever China is doing and is likely to do is moving the country in the right direction.
So Warwick, what do you make of this rather specific language, like as what the government is to do to help boost the domestic consumption?
Well, I think it's important to recall that the idea here is to boost domestic demand, of which consumption is one part. Investment demand is the other part. And the reason why I say that is because investment demand and domestic demand are tightly connected with each other, because it is through growth in investment demand that we actually drive wages growth, particularly through improvements in productivity. I might mention also in relation to the exchange rates question that in fact those who want China to appreciate its currency further may actually want to think very carefully about that particular wish. And I say that because when you actually look at complex manufactures such as EVs, PVs and things like that, you actually need to understand the composition of costs. Now, if the majority of costs of those products are determined by the domestic economy, then a change or an appreciation of the currency will actually lead to a reduction in their export competitiveness. But that's not the case for Chinese complex manufacturers. An EV, for example, when you break down an EV, you'll find that at least 50% of the cost of an EV and up to 70% of the cost when you take into account indirect inputs are actually determined by imported inputs, which means that if you increase the value of the RMB any further, the input costs will actually reduce, making the EVs even more competitive. And this is why we can actually understand what in mainstream economic terms is a very paradoxical result, which is a strengthening RMB and growing export surplus. So getting back to the broader issue around domestic demand, I think that is clearly a long-term commitment, Chindor, going back to the early 2010s. And we have seen that since the lowest point in terms of household consumption as a percentage of GDP, which was around 2010, when that level was at about 35%, we are now at 43%. So there has been a steady growth anchored by rising real incomes, which has been made possible by growing investment, right? So these things are connected, and I think we're going to continue to see that pattern go forward.
It's a gradual approach, Professor Chen. And also China says it is to keep its proactive fiscal policy and moderately loose monetary policy into 2026. So obviously interest cuts to boost consumption, investment too. I mean, loans probably will be easier for the businesses here.
So we've obviously we need both sets of policies to work. I personally actually think that there's more room for fiscal policy. With the monetary policy, the interest rate level in China is much lower, still much lower than that in the U.S. And if you cut interest rate too much, there might be an issue for smaller financial institutions that rely on the interest rate spread to make a profit. So on the monetary policy side, certainly there's more room on cutting the bank reserve ratio, so that you can release more lending power from the banks. And the second thing that's very important is interest rate will remain low for a while, so that this cost of financing and refinancing remains low. So that's what I think of the monetary policy. For the fiscal policy, there's more room, because a key in everything that we talked about, boosting consumption. When you want one important thing of boosting consumption is that you need to increase the income of certain households, right? You actually need to give them money, and then you also need to help companies that provides a lot of employment opportunities, because stabilize the employment market is also one of the top priorities for the central government going forward. So all of these things, you need. The key about the fiscal policy is that the Chinese central government's debt to GDP level remains the lowest among large economies. So, in the short term, you talk about this deficit, but to me, a more important measure for room of fiscal policy is the central government debt to GDP ratio. That remains about 18 to 20%. So, through the issuance of long-term central government bonds, for example, there's a lot of things you can do, including give subsidies, give income subsidies, give income to a particular set of households, and also keep supporting important companies.
Fiscal policies there. And Anthony, what about this idea of reforming measures to basically build a unified national market? Why is it so important? And also this rectification of disorderly competition. You want to have a healthy competition, healthy market, let's say. So that's sort of related.
Yeah, they are related. I think the building of the unified market is to basically get rid of the invisible barriers between cities and the provinces and things like that, and all with the mind of comparative advantage. You don't want to have all the cities also building the same industries. You want them to build what makes sense for a particular province or a particular city, where they have the comparative advantage. When you put all those forces together, you get rid of those invisible barriers. What you get is a much more robust, a much more resilient economy, which is the goal of the Chinese government, and it is the right goal to move in that direction. Because you don't want to have too much competition, because that just destroys these companies. So therefore, the anti-involution strategy that the Chinese are pursuing, too much competition where they just burn the price and reduce the margins to almost nothing, is also counterproductive.
Well, changing back to you, this unified national market, for viewers outside China, what does that mean? Why we are stressing so much about such a market there?
So again, I think there's several layers of meaning. Number one, China still has 1.4 billion people. So the domestic market is still one of the largest markets, domestic markets in the world. And the idea from outside viewers, you think about it. I mean, if you have very capable companies that can mass produce a lot of products and services at a reasonable cost, how are you gonna digest all these products? Well, as I already said, the international market, there's a lot of uncertainties, and there are a lot of non-economic factors that's very hard to hedge. The risk is very hard to hedge. So what you can do is, if you can make the domestic market more unified, as Anthony just said, that get rid of these visible and invisible barriers so that even high quality goods and services can have a home in different parts of China, that's the solution that's internally sustainable, right? So you do not need to rely on exporting strategies. You do not need to rely on other governments having cooperative actions at the border. So that's very important. So that the fact that we have a large domestic market, but because of all these barriers, it's not clear it's unified. Mm-hmm. So once it's unified, it's good on both the production side and also on the consumption side. So as I said, there are enough high-income cities on the coastal line that people there actually have the purchasing power to buy the highest quality and highest, most expensive items, right? And then of course there are other income layers in the other parts of the country. So if you really build a unified a market, that's in the sense unified on both the production and the consumption front. And then that's the real meaning of a true internal circulation. I think I will say that those two aspects are probably the most obvious ones.
Mm-hmm. Warwick, what is also very high at the agenda for next year is innovation or innovation-driven economic growth. Tell us more on that. So basically China continues. I mean, that's a long-term policy with emphasis on innovation.
Look, it has been, and one of the main reasons for that is that the Chinese economic strategy fundamentally is underpinned by the idea of becoming progressively more energetically efficient. And that's because China is moving down the pathway of becoming an electrified state. And in doing so, it is enabling new processes and new production systems to emerge, but that can only be done on the back of innovative applications of science and technology, whether it's in robotics, whether it's in AI, big data analytics, and remote sensing, the low altitude economy. All of these areas actually go towards a couple of key things. One is it improves the efficiency of the production processes themselves, and secondly, in line with the ongoing development of a unified national market, it actually smooths out the flow of goods and services and people and information. And once you start bringing those two things together, whole new levels of productivity and growth potential are unleashed.
Well, on that positive note, we are coming to the end for today's discussion. Many thanks to our guests. You can also watch us on the CGTN app or on YouTube. I'm Xu Qinduo. Thanks for being with us. See you next time.